Welcome back to the Commstock channel. My name is Brian Hendrickson. Today I have Dan with me. Welcome.
Always good to be here.
Thanks for being on. So today, Dan, you wanted to talk to us about something called the Purdue-CME Ag Economy Barometer. Can you give us a brief description of what that is and when it started and what exactly it measures?
Well, this is actually a monthly poll of a cross section of about 400 farmers across the country, and it's done by Purdue University, and it's sponsored by the Chicago Mercantile Exchange. And the purpose is to ask this selection of 400 farmers a variety of questions to kind of take their pulse and how they're feeling about the future in different areas. It's a series of questions. Some questions are asked the same questions every month, and sometimes they ask a new question. But the point of it is that the folks at Purdue and the folks at the CME realize that to some extent, the attitudes that farmers hold about the future could be a self-fulfilling prophecy in terms of what does it mean for their view on land prices? What does it mean on their view of their financial condition? Are they getting better or getting worse? So they invented this a barometer. They call it an index. And I'll start out by saying I'm going to walk folks through a series of slides where a value of 100 on the barometer is growth neutral. That means anything above 100, they see some improvement. Any number below 100, they see deterioration. So with that in mind, that's the background. They've been doing it since 2016, and they do it every month. And we just got the October survey results.
So as the Commstock Senior Economist, what do you find most helpful about this monthly survey, and how does it help you do a better job as the morning report editor?
Well, to me, there's nothing more important than understanding where the mindset of our clients, because as most of us grew up on farms, so we have a farm background. But knowing what's the coffee shop talk? What are people? What's the attitude out there towards their future? Because if we can it's kind of like taking the pulse of agriculture. I know it's a broad term, but that's what the purpose is to take the pulse. And as an ag economist, it's good for me to know what the pulse is because that actually helps shape the coverage that I do. I do in my morning report twice a week. I do something called Other Ag Headlines and Hotlines, where I scour news every day. And those 2 mornings a week on Tuesdays and Fridays, I get to talk about what I think our folks ought to know about what other people are saying and what my take on it is. So that's why the Ag Barometer is something I look forward to every month.
So where do you want to start with this October survey results?
Well, I would start out by saying there's a composite barometer where they take the answers to all the questions and just say, what's the overall attitude? Are farmers getting more positive than they were last month or less positive than they were last month? And the October results showed a reading for the overall financial condition. It went up 4 points to 106. That's the overall composite. But what I want to show folks here is they split that out then into an index of current conditions. What do they feel about current conditions versus what do they feel about future expectations? And so what this shows is that we bounced up a little bit in October, but we're still kind of stuck at just a little bit above the neutral line. In other words, when the farmers are asked, what do you think about current conditions? They're just like neutral. I'm not sure whether it's going to get better or get worse. Well, what about future conditions? There we ticked up a little bit. The number is 114. And so that shows that at least in October, they're a little bit more confident about future expectations for their financial condition.
The graph that you sent me is labeled the Farm Financial Performance Index. What jumped out to you on this graph?
Well, what jumped out at me is that the results for October there are at 92. And we had been flat on farm financial overall performance. We've been flat for 1, 2, 3, 4 straight months. But it jumped up to 92 in the month of October. And that's the highest since March of 23, March of this year for future performance. And the commentary that I see The Purdue economists, they put a narrative out there. Well, here's what we see in these numbers. And I agree with what they found is that, well, what would account for that? Two things: higher than expected yields for this summer for most of them, and stronger than expected market basis for most of them. So just those two factors, a little bit better expected yields and a little bit better basis for harvest time than they expected, is what caused that jump in their farm financial performance for 2023.
All right, so the next barometer reading is something called the Farm Capital Investment Index.
Yep. This it's a
What
measure,
jumps out to you on this one? Because it looks
not so good.
not so pretty.
The trend is going the wrong way. And what this is a measure of farmers' attitude about investing in capital asset items. New buildings, facilities, new machinery, buying more land. And what that shows is that actually went down in the month of October, and it's at one of the lower rates. These numbers here go all the way back to 2015 when this survey first started. So we're hugging the low end of going all the way back 8 years in terms of, is this a good time to be investing in capital assets? And what's the reason for that? Two reasons, actually three reasons. One is that in the area of machinery, for example, machinery prices are still sky high. Even used machinery prices are extremely high, too high in the opinion of most farmers. Two, most of them have come off of several good years when they pretty much have done the capital investing that they needed to do, and they can. There's nothing urgent that needs to be purchased in the area of equipment and machinery. We can wait for a while, is what the farmers are saying here. And in the area of land, land is obviously a capital investment. We'll be talking about that in a few more slides.
All right, so this one looks very busy. I see a lot of different colors and kind of different columns, so help simplify this, not just for me, but our viewers as well.
Okay, well, you got to start with the question at the top. The question is, looking ahead to next year, what are your biggest concerns for your farming operation? And it's kind of a multiple choice question that the farmers are given. Okay, are you more worried about lower crop or livestock prices? I'm reading from left to right here. Higher input costs. How about regulation, environmental? How about farm policy, just the progress or lack thereof on the new farm bill? How about rising interest rates or the availability of inputs? Now, all the different colors there, those represent all the different months. So this basically goes back to January of this year. What's most important is to see which one of those questions or those choices got more votes in October than in previous months. And the only two that jumped out at me that got more votes than in September were they're still worried about higher input costs, mostly as inputs not going down, other than fertilizer, which has come down, and the availability of products. We went through the whole supply chain interruption where they just couldn't get what they ordered. But what's happened, interest rates are impacting input suppliers in that they don't want to carry much inventory, because inventory costs a lot of money to just have stacked in a warehouse. And so they're aware, the farmers are aware that their suppliers' inventories are drawn kind of low. They'll say, yeah, we're not carrying much right now because of the high interest rates, but don't worry, we'll have it when you need it. Well, if your supplier is telling you not to worry, they'll get it somehow. That's when you start worrying. So I think that's why that jumps out.
I'm sure everybody will be interested in the next questions farmers are asked. What do you think about the trends in land prices? And we've actually done one over land prices, and I've talked to other people about it, and it's my opinion, it's not pretty, but
Well, Brian, sometimes you can be a glasses half empty person. I'll be the glasses half full person. All right, because what the short term outlook, well, what do they mean by short term? That's in the next 12 months. What do you think is going to happen to land prices? And we're kind of stuck there. It's still it's 125. Remember, 100 is growth neutral. So it's actually, it's been stuck at around the 125. Farmers are basically saying, well, in the next year, I don't think land prices are going to go up very much. But most of them think, but I don't think it's going to go down very much either. It's just going to kind of hover in a sideways action for a while, just for the next year.
So that's how farmers size up the outlook for land in the coming year. But I noticed in this slide, still shows farmers expecting land prices to continue to rise over the next 5 years.
Indeed, and that's good news. It shows they're more optimistic that the long-term uptrend in farmland in the next 5 years is going to continue. And you'll notice that's in an uptrend, even though it's been flat. The short-term outlook for the next year has been flat for 5 straight months now. But this 5-year outlook has been getting better and better. They're getting more and more confident that the uptrend in land prices, it's not going to stall. It's the general trend is going to go up. Very few of them are afraid of a downturn in land prices. Now, that's the good news. As an economist, I look at the reasons given. I look at the narrative from the Purdue Economist on the number one and number two reasons why farmers are still optimistic about farmland long term. Number one reason, continued interest by outside non-farm investors, not their own desire to grow and have more land. They're optimistic about land prices because the non-farm investor public is going to continue to support land prices. Number two reason, inflation is going to continue. Now, I got a problem with both of those. Number one, farmers are still the primary buyers of farmland. And what the farmers are, they're saying, we don't think we're the ones that are going to be driving land prices up because of where prices are and where profits are, but we still think those non-farm guys are going to do it. And we also think those non-farm guys are going to be doing it because inflation is just going to get worse. Well, Brienne, we look at those inflation numbers every month, and they just came out. One of the reasons the stock market took a big jump this week is that the inflation number was down from last month, more than expected, down to around 3.2%. So if those are the two biggest reasons that farmers think the long-term outlook for land is going up, that's a little shaky. Now, do I personally think that land prices are going to go down? I don't. The high-end ones that we do hear some anecdotal, and here's another reason why farmers are thinking that it's going to be the outside guys that are doing it. We are hearing every now and then anecdotal reports of really high-priced land, the high CSR value land, the $19,000 and $20,000 an acre land, where it goes up for auction and there's no sale because the bid didn't hit the minimum price. That's a bit of a change. We're hearing a few anecdotal sales where very high-priced land sold, but for less than the same quality land sold last year. But those are outliers. But those are other reasons why I expect the increase in farmland values to greatly slow down. But I see very little risk of a decline in land values, except for that super high-priced land where the profit from the farm won't even cover the interest on that land.
In this last graphic you sent me, it has a brand new question for this survey, and it only asks the corn and soybean farmers. What does this tell you that we all need to kind of be aware of?
Well, it gave them 6 different things that they might have done in response to talk about climate change. I'm talking not just last year was dry or the year before that, but a concern about a long-term trend towards climate change. Installing drainage tile was, I'm reading left to right, okay, 9% had said we've done this in response to our concern about long-term climate change. Another 9% said they installed irrigation. The only ones that really jump out at me were they planted more drought-resistant varieties, they changed the mix of crops planted, or they adopted or increased their usage of no-till. Those are by far the most common things that farmers are doing as a group. And remember, this is 400 farmers surveyed, cross-section of farmers across the country. And when it comes to things like changing the planting mix, just going back to a normal corn-soybean rotation is one of the things they would do, rather than continuous corn. Another thing that we were seeing in the plains, for example, is switching to a less moisture-intensive crop like sorghum over corn, planting more sorghum instead of corn. Those are the kinds of things that farmers are doing. The biggest thing that this slide tells me is that there are climate cynics or climate skeptics out there who say, "Oh, this has been going on for thousands of years. It's all phony." Farmers are not cynics. They remember what it was like when they were growing up, and they see the difference just in their own farming operations. And they see a definite concern about climate change, and they are taking some response. So there might be some farmers out there who are cynics and skeptics, but this slide tells me that for the most part, farmers know it's real, and if there's something they can do to reduce the moisture requirements or improve the performance in dry years, they're going to do it.
All right, as we finish up, my overall question for you is, how concerned does this make you? Are you okay with the numbers where they are, or are they where you want to see them, or are they down and you are concerned? What's your overall opinion?
My overall opinion, Brianne, is that I'm actually I'm satisfied. I'm not overly concerned about these numbers. In fact, they give me a sense of confidence that the farmers at least taking the survey, they're realistic. They have a realistic view of what's going on, and I would feel much more concerned if I thought that the answers revealed a very naive and unrealistic view of the future, or an over pessimistic view of the future. This survey actually gives me a lot of confidence that farmers aren't panicking. The outlook is maybe stalled for a while, but long term it looks good, and that there's still going to be opportunities out there, opportunities and risk. And risk management is sometimes it's not just managing the risk of prices going down if you don't sell, but also managing the risk of selling too soon and prices going up. And one of the things I like about working at Commstock is we help people manage both sides of that risk.
All right, that'll do it for this episode. Thanks so much.
You're welcome.
Want more premium content? Subscribe to the Commstock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.